To my YouTube channel. My name is Kingston, and in today's video, based on popular demand, in today's video we're going to be talking about market structure. And also I want to use this opportunity to thank everyone that engaged in my first video, which is on directional bias. And I want to say thank you guys for those that shared, like, and drop comments. I actually see all the comments, and I see all the video requests that you guys are making under the comments, and I will make sure that I will make videos on those requests. So if you have any video requests that you want me to make, just make sure you drop it on the comment section. And based on high demand, we're going to be talking about market structure in this video. All right, so today we're going to be discussing market structure. Okay, let's just dive into it. Okay, sorry guys, don't mind my voice. I've been having cold lately, so the thing actually affected my voice a little bit. So but I'll make sure that you guys hear me clearly and understand what I'm saying. Okay, so today we're going to discussing market structure. All right, what is market structure? Market structure simply means the overall direction of price movement in a particular market. Okay, it simply means how market moves, or the behavior of market from one key level to another key level, or from one the uptrend, we have the downtrend, we have the sideways trend, which is called, is either you call it sideways, you call it consolidation, or you call it a ranging market. Uptrend simply means when market is in a bullish trend, when it's going up, okay? Or downtrend is when market is what? Going down, you understand? While consolidation or sideways is when market is ranging, it's not going up, it's not moving down, it's just moving, it's just consolidating for too long, you understand? That is what consolidation market is. Then in an uptrend you look for buy, while in a downtrend you look for what? Sales. While in a consolidation market it can be scalping, or you just better stay out of the market to avoid being liquidated. Okay, so in this video today we're going to be implementing two concepts, which is called MSS and what? Break in market structure. What is MSS? MSS is a concept used for what? Reversals. You understand? It's a concept that we use to indicate when market is about to change trend from being bullish to bearish, or from being bearish to bullish. Then what break BOS? BOS stands for break of market structure. It's used for what? Continuations. You understand? When market has already reversed and is moving in a one particular direction, then we'll make use of what? Break of market structure. You understand? To kind of keep riding, to be able to find our entry, to like keep on trading to the particular direction of the market. All right, so we're going to dive into the chart now, look for other examples of market, other examples of structure, and how to implement it in your day-to-day trading. Let's go. So alright guys, on today's chart example I'll be making use of GBP USD. Okay, I know you guys, I don't want to use the EU again, I just want to use a different channel. I know that a lot of people trade GGU. Maybe when I explain how to pick a POI, I might use gold chart example. Okay, so this is actually one of the requests. Someone said I should use a GJ as my chart example. All right, so looking at GJ now, with the market structure we have learned about market being an uptrend, or being in a bearish trend, or being in a consolidation trend. You understand? One thing you should know, that before structure you should understand directional bias. That's why I posted that video first, so that if you understand bias, you're able to determine your structure, if you're in a reversal phase, or in a uptrend, or in a bearish trend. Okay, looking at this chart now, okay, you can see that we are what? In a bullish trend here. Okay, you can see that we are in a bullish trend. All right, so how do we study structure? You can see that around this level, this is where price change from being bearish to being bullish. Okay, I hope you guys can see and hear me clearly. So now at this level now, price created this low, then break past this high here. This high becomes of what? Our MSS, which is our MSS is used for what? Reversals. Okay, so market have confirmed that okay, we are no longer in a bearish move, we are now in a bullish move. All right, so after this particular MSS here now, you start implementing break in market structure, which is BOS. You understand? Okay, so how do you go in the market and start looking for it? Is this after market break past this high, you can see that we have a what? Break of structure here. BOS here. You can see now at this point now it becomes what? Double. Whenever, just put it this way, that anytime you have a double break of structure, the setup is very, very valid. It's hardly to fail. Pay attention. You can see that after that what? MSS, break of structure, the first pullback, which is what? Our inducement. Okay, I will explain inducement in my next video. Okay, then you can look for what? POI. You can pick any of this level here and enter for your what? Buy. So at this point now, okay, because you are taking this buy and the market took out this high now. Market have took out this high. Okay, in your mind now, because of this small movement to the downside, oh, the trend have changed. The trend did not change. Or maybe someone will go and be marking someone at this level. Start looking for sell at this level. Market is likely to violate your entry. You understand? So what do you look out for? Pay attention. You can see that around this level here, after price break this level here, it break what? Another was structure here, which is what? We have double break of structure. Let me put it here, BOS, or let me add the capital letter D. We have our double break of structure to the upside. Understand? So that's what I say. The only two concepts that you need is either the double break of structure, it's either the break of structure or the MSS, which is the market structure. The MSS is used for when market is about to change trend from being bullish to being bearish, or from being bearish to being bullish. Why the break of structure is for continuation, like you use it to be riding the trend. And when you pair it, like when you use double of it, double break of structure, it becomes more stronger and more powerful. You understand? Okay, go to your chart and backtest this. And I'm not just showing it on my chart. Go to your chart, open it, go and mark out with all the double break of structure and see how price respect those levels and buy to the upside, or respect those levels and sell to the downside. Okay, and it has happened afterwards, a reversal, when you understand the direction of the market and when you understand the directional bias of the market, and the market have already given you MSS, which is market structure shift. And when you are marking your market structure shift, leave lower time frame. Not when you go to 3 minutes, 5 minutes, you be marking a MSS. Okay, say, oh, trend have changed on this time frame. No, focus on the higher time frame, like H1, H2, H4, 30 minutes. Those time frame are more stronger, you understand, than the lower time frame, because there's a lot of noise in the lower time frame. So you better stick with what? Higher time frame. Okay, you can see now after this double break of structure here, we look for what? POIs. You understand? After this break here, you can see price made a pullback to the downside. There's naturally any valid POI to this downside here. Any valid POI to this downside here. You might actually pick this. Okay, let me show you something. You might actually pick this level here, and price will what? Tap you out. Okay, it happens. No strategy is 100%. That's why I'm showing you this now. After this particular break of structure to the downside, inducement is meant to happen, but this particular trade there is no inducement. So even if you pick this, it got violated, it doesn't mean that trend has changed. It means that you hit SL, which is normal in this trading industry. No strategy is 100%. You hit SL, so take it. That's why risk management comes in. All right. So after that, what do? You wait. You can see after waiting, you can see that price what happened to what. You can say we have another break of structure here, and we have what? Another break of structure here. Okay, you understand? But you can see on this break of structure here, we didn't have any pullback to this level. Okay, we didn't have any pullback to this level in this current price action. Price moved to the upside, made this pullback, keep moving to the upside. You understand? So eventually you can see that here again, price what? Make another break of structure here, and another break of structure here. Pay attention, we are not using MSS again. We have already made use of MSS around here. All we are looking for is what? Breaking market structure. And you can see I've never moved from this time frame to another time frame. I'm still using this time frame. Then we have a single candle inducement here. Then you can use what? The POI around here as your what? POI. You can take your next buy after the double break of structure. Then again, you can see that after market have moved to the upside, break this structure here, and also break this structure here. What do we look out for? The POIs. You can see this last bullish candle. You can mark it out. We take our what? Another buy. Pay attention again. You can see that we have this high here got broken here, this high, and we have another high here got broken. Like these two highs now got broken here. Then you can actually pick this POI here and take your what? Buy. So eventually price started moving to the downside. Remember, our POY that within that price mitigate after the double break of structure. Let me complete the double break of structure here. See it. Price came back to it here. You see, price action is like there's a way you will understand what you are doing like this. You are not scared of the market. You feel like anytime you go to the market, you know what you are looking for. If you understand your structure, understand POY, understand liquidity, understand directional bias, that's it. You see this 14 I mentioned, understand directional bias, understand your structure, understand how to pick the right POYs, and understand liquidity. You are good to go. You are good to go. Just go and make the market. So now you can see that price came back to that POY and started what? Buying. This move that happened here, and it doesn't mean that trend has changed. You understand? It doesn't mean that the trend has changed. Okay? It means, okay, this is like a normal pullback, because have it in mind that we have been buying, so there is liquidity piling up here. So price just went down, clear those liquidity and continue pick. I feel like picking orders. I don't call it clearing liquidity and also picking orders to gather enough momentum to push the upside you get. So you can see here, after price tap into that POY, we can take our buy here. So after that buy, you can see that we have another what? Break in market structure here. We have another one here. After that double break of structure, you can see that POY, the other block or the breaker block here, we have another entry to the upside. Then price buy to the upside. Then we have another what? Pull back again to the downside again. I think it didn't even mitigate this particular POY. So after this buy, market make another what? Pull back. You can see that, pay attention, after this double break of structure here, after this one, pay attention, after this break of structure here, and this break of structure here, you can see that after this pullback in our market buy, there was not any valid break of structure here till market started under what? Movement to the upside again. You can see how many entry we have. Like, you can see how many entry we could catch by implementing just these things. Just these things, double break of structure. You can see from this level here, you can see, let's say if you go to a lower time frame, you might see an entry this level, okay? But if you're on this time frame, you might miss this setup. But if you go to 15 minutes, you can see this week here that tap into this POY, it created another block that mitigate price to the upside. But we are not moving to this. Let's stick with this time frame, okay? So after this, let's say it makes this setup, now market what? Went up again and break what? Another structure to the upside, double break of structure to the upside. Pay attention, okay? You can see, you can look for a POY, you can mark out this, see, a sniper entry for your entry. Then you can use this as your inducement to buy to the upside. You can see now implementing this, now you can see after this crazy momentum to the buy side, pay attention, you can see that we now enter a phase of consolidation around this level. You see, price started consolidating. Eventually we have what? A double break of structure. You can see now, we have our what? MSS, which is what? Market structure shift, okay? Confirming that we are what? In a what? We are no longer in a what? Bullish trend. We are now in a what? Bearish trend. MSS. Let me bring it downward. Okay? So at this point now, we look for what? Inducement, which is what? This level here. Then our entry will be at this point, this breaker here. Then we can take our buy, our sell here to the downside. You understand? Our sell here to the downside. Then remember this particular POY that I told you that didn't mitigate. Oh my God, price action is amazing. Price action is amazing. I'm telling you guys, it's so sweet. Remember this POY that I told you didn't mitigate. Watch, price came back to it. You see, came back to it here. Okay, let's say for example, you don't want to enter this trade here. You're not sure if market is actually changing trend from here. Watch, you can see that enterprise mitigates, see a phase of consolidation around this level. Then you can see that we have another what? Break in market structure here. Another what? Break in market structure here. Like double break of structure to the upside. Then we have our what? Inducement here. Then after that inducement, then the POY will pick this particular breaker block here. See? You catch your what? Trade to the upside. So this particular setup I'm waiting for here, now pay attention. You can see that this is the same thing I'm implying. First break, second break of structure. Then you can see that inducement, this is the weak single candle inducement. I'm actually waiting for here for price to make a pullback so we can continue riding the trend. As easy, simple stuff. Okay, so guys, I will stop here. maybe in future I will also make another part 2 of structure video. But I would like to, like, if you want me to make any video on a particular stuff or anything see me mention that you might want me to make a video, drop it on the comment section. You understand? I will attend to it and I'll make video on it. Okay, so now make sure you subscribe to the channel, share the video, like, you understand, because have it in mind that in this channel you understand technical analysis in a very simple level, no complicated things, straight to the point. All right, so thank you guys for watching this video. I really appreciate, and thank you everyone that watched my previous video. I really appreciate. Thank you so much.